Folks, as most of you know, the market has been crashing, and crashing some more in recent days, but it's not going to last forever. Let's not get into panic mode. Let's not forget that this will only last a little while. The peak is supposed to happen in about 3 weeks, and after that, things are going to be smoother. And the Fed is doing everything possible. The government is doing everything possible. We will get through this together. And sooner than later, you're going to be asking me, Roger, the markets are cheaper now. What's the best stock? Right now, everybody's in fear mode. But soon, everyone's going to get into greed mode. That's coming. And remember, markets always anticipate everything that happens ahead of time. So get ready. There are bargains out there right now. Now, am I saying you should just jump in with both feet right now? I don't think so. But here's what I'm going to tell you. And if you don't listen to me, you will probably regret it. The strongest sector right now is the technology sector. It's holding up amazingly well. And it doesn't make any sense because this whole thing started in China. But regardless, the semiconductor sector is the strongest industry within the semiconductor sector. Why? Well, solid state drives have been the norm. First, we started seeing them in home computers, and now we're seeing them in industrial computers. And with the world becoming literally in the cloud, I mean, think about it. How much would you be able to accomplish without the internet, with being locked up in your house these days? The world is becoming more and more and more and more dependent on the cloud. And that means memory devices, memory chips, memory storage technology is going to be leading. Chips, storage, technology. Now, there are two companies that are leading in that category. And again, I want to make sure that you understand, we're not talking about a 3-day swing trade. We're talking about the long haul. The long haul. Now, one of the reasons why I like these two stocks is because they were being recommended, and I liked them before the crash occurred. I'm not looking at stocks that are cheap now, but we're already on the way down before the crash occurred. These stocks were gaining momentum, both on a technical level and fundamental level. So let me tell you the first one. It's Western Digital. Ticker symbol is WDC. There's been growing demand for solid state drives, and as I mentioned, and dividend yield on the stock is over 6%. Now, there are two major factors that this makes this tech play attractive. Forecast is to double enterprise level SSD solid state drives revenue over the next calendar year. That's an amazing forecast. Revenue has grown steadily over the last 5 years, and I'm expecting increased dividend as soon as the economy gets out of the current glut, which is going to happen sooner than later, mark my words. Stock hit a high of $72 before the corona crash and is now trading at a mere $44 per share, making it very attractive. The stock currently has 14 buy recommendations, making it a very attractive value play near the current price level. And again, I'm looking for a long term. I'm not looking for short term. This is a long term hold. And again, remember that. The stock may come down a little bit. It may go up a little bit. There's a lot of volatility in the market. The average volatility in the stock is 5 to 8 times what it was before this corona selling pressure. So as soon as it gets behind us, we're going to see a lot of institutional accumulation, and they're going to look for stocks that are selling cheap but have a lot of value. The second stock is Seagate Technology. STX is the ticker symbol. The storage maker posted a revenue of $2.7 billion and paid an annual dividend of roughly 5.5% to 6%. Dividend has increased over 50% in the last 5 years, and the stock has an ultra low P/E ratio, somewhere around 10 times earnings, which is very, very low for a tech stock, a seasoned tech stock that has some premium built in. It's very, very low value. I mean, very, very high value for the price. That's what I'm saying. I'm getting all confused here. Seagate benefited from a steady increase in average capacity per drive in the last 5 quarters in a row. And during the recent coronavirus panic sell-off, the stock was selling as high as $64 and is currently valued near $47, making it a very attractive longer term value play. Again, these are not stocks I'm recommending for the next few days. These are stocks I'm recommending for the long term, 6 months to 2 years. All right. I believe as soon as the coronavirus passes us and volatility declines, we're going to see a lot more upside in this sector. Why? Because it held off better than blue chips. It doesn't have the industrial, the energy, and all of the other factors that are going to keep weakening a lot of industries after the coronavirus passes. For example, I'm going to give you a really good analogy. The retail sector. Even after the coronavirus passes, you're going to have a lot of these issues because people can't pay rent, etc., etc. But these are companies that make their whole living in the internet age. So they already don't have all these factors that are involving a lot of industries like the entertainment industry, like the retail industry, like the restaurant industry or the hospitality industry. The bottom line is you want to be in sectors that are maintaining strength. And the NASDAQ 100 never went below the 200-day moving average on a weekly basis, making these stocks a very, very good long-term basis. You're not going to find a lot of growth and tech stocks that have been consistently increasing their dividend over the last several years. But this is one of them, and I think these are two of my favorite tech stocks right now that have long-term growth value, in my opinion. Folks, market crashes and extreme volatility, it seems to be the norm nowadays. To help investors and traders that are struggling right now, Tom Busby, the world's #1 pre-market trader, and I are teaming up to bring you one lucrative strategy that you can use in this intense market. And I think intense is a good word here. It's called 7 a.m. Super Surges, and traders are using it to potentially earn a steady stream of income no matter what the markets are doing. That's right, no matter what the markets are doing. If you're looking for a way to get your portfolio back on track and gain an unfair advantage in this market, I advise you to watch this presentation. Join by clicking the link below. Do it now. Don't regret it.